Hey there, future millionaires. Ever heard of index funds? Don't worry, they're not as complicated as they sound. Think of an index fund like a ready-made stock portfolio. It's like a sampler platter of the stock market, giving you a taste of everything. Instead of buying individual stocks, you buy into an index fund that tracks a specific market index. Imagine trying to bake a cake from scratch versus using a cake mix. Index funds are the cake mix of investing. They make life easier and tastier, hopefully with more returns and fewer financial headaches. Index funds are like the set it and forget it option of investing. You buy in, and the fund managers do the heavy lifting, making sure your investment reflects the market's performance. Less stress, more chai time. Now, let's talk about market indices. You've probably heard of the Nifty 50. It's like the VIP list of the Indian stock market, featuring the top 50 companies. When these companies do well, the Nifty 50 goes up. When they struggle, the index dips. An index fund that tracks the Nifty 50 basically buys shares of all those companies in the same proportion as the index itself. So, when the Nifty 50 rises, your index fund's value also rises proportionally. It's like riding the wave of the stock market. But what if you're not interested in just the Nifty 50? No problem. There are index funds for almost every sector and market imaginable. Tech, healthcare, even international markets. You name it, there's an index fund for it. One of the best things about index funds is their low cost. Remember those fund managers I mentioned? They don't come cheap when you're investing in actively managed funds. But index funds? They're like the economy class of investing, affordable and efficient. Since index funds simply track an index, they don't require a lot of buying and selling of stocks. This means lower fees for you, which translates to more money in your pocket in the long run. Plus, because index funds hold a variety of stocks, they offer built-in diversification. It's like that old saying, don't put all your eggs in one basket. If one stock in the index doesn't perform well, the others can help balance things out. Index funds are not about getting rich quick. They're like that friend who's always reliable, not flashy, but always there for you. They're designed for long-term growth, like saving for retirement or your dream home. The stock market has its ups and downs, but over the long term, it generally trends upwards. By investing in index funds, you're essentially betting on the overall growth of the market, which historically has been a pretty good bet. Think of it like a marathon, not a sprint. You're in it for the long haul, and index funds can help you cross that finish line with a smile on your face and hopefully a fatter wallet. Section 5. Beating the market, not always necessary. Now you might be thinking, but Veer, what about those hotshot investors who beat the market year after year? Sure, they exist, but they're like unicorns, rare and hard to find. Trying to time the market or pick individual stocks is like trying to predict the next Bollywood blockbuster. You might get lucky once or twice, but chances are you'll end up with more flops than hits. Index funds take the guesswork out of investing. You don't need to be a financial guru or spend hours analyzing stocks. Just choose a reputable index fund, invest consistently, and let the market do its thing. Section 6. Free financial calculators. Your path to smart investing. Want to make smart financial decisions? We are giving away free financial calculators. These handy tools can help you figure out how much to invest, calculate returns, and plan for your financial goals. It's simple to claim yours. First, take a screenshot of this article right now. Then, share the screenshot on WhatsApp with your friends who might also find this useful. Finally, send the screenshot to WhatsApp number with the message, Financial Freedom. Our team will send you the link to download your free calculators. Remember, investing is for everyone, not just the wealthy. Start small, stay consistent, and watch your money grow over time. Section 7. Index funds, the lazy and smart way to invest. So, to sum it all up, index funds are simple, like ordering takeout instead of cooking a 5-course meal, affordable, easy on the wallet, leaving you more money to invest. Diversified, like a well-balanced thali, spreading your risk across multiple stocks. Long-term focused, building wealth steadily over time, like a SIP. Index funds are perfect for passive investors who want a hassle-free way to grow their wealth. Remember, investing doesn't have to be complicated. Start with the basics, stay disciplined, and enjoy the magic of compounding. Section 8. Disclaimer. I'm just a funny guy, not a financial advisor. Before you rush off to invest your life savings, remember, I'm just a comedian who likes to talk about money. This is not financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Happy investing!